Here's one of the biggest mistakes that people make with this though, if they're not planning on getting tax deductions and stuff throughout the year, is they take their profits All right, so first and foremost, so I don't get sued, just remember that I'm not a financial advisor. I'm also not a CPA, and I'm also not the smartest person in the whole world. So, but what I am good at is I'm good at making processes and procedures to help me become more successful. And because I am so stupid, it makes it to where I don't have to think as much and I can just kind of do. The very first thing that we want to cover, because let's be honest, if we can't handle our personal finances, if we don't have that in lock, then you're never going to be able to manage business finances. You can tell how someone manages their finances very, very, very quickly if you looked at their business bank account. What we're going to talk about real quick is we're going to talk about the different bank structures that I have, and then we're going to talk about the kind of the things and the systems and processes I've put in place to make sure that this is being executed on without me really having to think about it too much. Of course, as you're just starting off, maybe you're going to have to do some of this stuff manually yourself. But for what it costs to have it a little bit more automated, it's totally worth it. Especially once you get your finances in lock and you remove out some of that negative trash, you can replace it with something that's gonna bolster your finances, okay? First and foremost, bank account structure. The very first thing is expenses, right? All of us have expenses. You're gonna have an expense bank account, all right? The expense bank account is nothing but for spending money, right? That's the only account that you actually spend money from. Your bills come out of it, everything comes out of it, centralized place, because we're gonna use that centralization in order to then be able to streamline this process in the future. The next thing that I think is probably the most important account to create first is going to be your stress-free account. All right, your stress-free account is essentially emergency savings, okay? Stress-free, the reason I call it that is simply because, well, I don't really want it there, and it's not there for really emergencies, it's there for me to feel as though that I'm gonna be okay in the fact that emergency happens. So I call it stress-free account. You want at least 6 months of savings inside that account. And that's why the expense account is so important, because we wanna be able to track what our expenses are and what those major expenses are that make us to where we can survive, and make sure we have that in there. For me, I survive. My whole family lives off of I think it's right around $6,000 a month or whatever, but $40,000 is enough for my emergency account. That's what I have in there. That's what I keep in there. It never goes below 40 grand. The next thing that I think is most important before we even start building wealth is going to be our live free account. Our live free account is essentially an account that enables us to be able to spend money whenever we need to spend money, okay? If you wanna go into a Billabong like I did the other month and walk in and accidentally walk out spending $700 when you didn't plan on going into the store, the live free account is that account that allows you to do that. It's like the money's in there, I can spend it. I don't have to feel guilty about, buying myself something. You buy a new watch, you buy new sunglasses, everything like that that's not planned should just come out of your live free account. It's also the account that we use to go on vacations and things like that, okay? The next account after that is gonna be what one of my mentors calls the wealth capture account. The wealth capture account is essentially the account that you put a certain percentage of your income in to continue just to save that money and then reinvest that money into wealth capture type investments such as real estate, life insurance policies, and all that kind of stuff. All right, our expense account has all the money come in there that we make. Everything just goes in that one central account, and then we're gonna take, initially, until we get 6 months of stress-free, we're gonna take every bit of extra income that we have. I don't care what it is, and it's all gonna go into that account, okay? It's all gonna go into there. After we have that emergency savings, right? After we have that stress-free done, now we're gonna start taking 3 to 5% of our active income, and it's gonna go into our live free account. Okay, so let's just say we make $5,000, 3 to 5% of that off the top is going to go into our live free account, okay? Because we don't have to fund our 6 months of stress-free no more, all right? Up to between 8 and 15% of our active income is then also going to go into our wealth capture account. Now, the biggest thing that people end up coming to me with when I talk about this process is that, well, Tyler, if I made 5 grand, what if I only have $1,000 of living expenses? I'm gonna have leftover money. out of the 3 to 5% and then the 15%, there's a gap there, right? There's like another, let's say there's another $3,000 that's just left over. What do I do with it? Well, you just got to decide with your leftover money, what percentage of it goes where. You could take 25% and put in your live free account. You could take the other 75% and put in your wealth capture. Divvy it up as necessary, especially as your active income continues to increase. It gets to the point where it's like, well, I got a lot of extra money and I don't really know which one I want to put it in. And that's where you simply got to kind of make a decision on what are you focusing on in your wealth that kind of period in your life, that quarter. It might be buying more properties. It might be, going on vacations. It might be just kind of relaxing. So you kind of put that money, that extra money in whichever you want. But outside of the bank accounts, there's one other thing that I want to make sure that everybody has inside of their house. And this is really just making sure that your household is taken care of. And that's a home safe, okay? I want to make sure that you guys have at least a month to 2 months of cash to take care of your family inside of a safe. So for me, I just keep 10 grand in there at all times when it comes to liquidity and cash. There's always at least 10 grand there so that I know that I at least have between 2.5, 3 months or whatever in cash to make sure that I can still, if the banks go down, if something happens in the power grid, whatever, I still have some money to take care of my family, okay? So make sure that's there too. This is also the safe where you're gonna start putting, maybe some of your precious metals in. I have at least 3 months worth of my expenses in precious metals as well. And then you have, anything else, your nice watches, your jewelry, things like that. Home safe is probably one of the best investments you can ever make into yourself and your family. In fact, on my personal P&L, which we'll talk about here in a little bit, I actually have a line item for not investments into real estate or anything else that gives a return, but investments that are an investment into my household. And my safe was, for example, one of those investments, okay? Now that we've talked a little bit about the personal finance structure and some of those bank accounts, let's go ahead and move over to our business bank account, because this is something that as you continue to grow your businesses, you're gonna have to get more complex with this. But the nice thing is that it's really rob and duplicate, right? Whatever you did in one, you just do in the other. And it's really similar to how you do your personal finances. So we need at least at least 4 accounts for our business bank accounts. One is an expense account, one is a profits account, taxes account, and then you have a reserves. And also, not to confuse things here, but depending on your LLC structure, whether you're a sole proprietor, an LLC, an S Corp, or whatever, you might also need a taxes account for your personal finances because you might be paying taxes against that money as well, depending on how you're paying in, whether you're a W-2 or whatever. Just consult your CPA or an attorney about what you need to do for your specific situation there. Okay, so we have our expense account, our profits account, our taxes account, and then our reserves account for our business bank accounts. The distributions here are really similar to how we do our personal banking. We have our expenses, and then we have everything coming out of that one account. Then we have our profits, which is gonna be at minimum, depending on your business, I would say 30%. We're gonna get into how you take profits first here in just a second. At least 30% of your revenue, you should be able to put in the profits immediately. Before you put anything in your taxes account, before you put anything in your reserves account, if you made, let's say 50 grand this month, then immediately 30% of that, if it can't go into our profits account and we can still pay for everything else, then something's wrong, right? We're spending too much in marketing, we're spending too much on our employees, we're doing something wrong, okay? You gotta be able to make sure that you can pull profits. And if that means you gotta work a little bit more, then that's fine. If you wanna sacrifice profits for having another employee and maybe you only take 20% profit, that's fine. But whatever your profit number is that you wanna make as a company, which again, 30% is a pretty good baseline, especially for real estate companies, if not more than that, then you gotta be able to take that money, okay? Taxes account, again, consult a CPA, but anywhere between 20 and 30%, depending on how much money you make. If you're just starting off, anywhere between 15 and 20% should be totally fine. For me, I put 30% of every bit of money that comes in, comes off the top and goes into taxes after I pay out my profits. Here's one of the biggest mistakes that people make with this though, if they're not planning on getting tax deductions and stuff throughout the year, is they take their profits right off the top and then they don't account for that profit. Let's just say you make $100,000, just make numbers easy. So you're gonna take 30 grand in net profits. but then they only put enough tax money in to be the difference of expenses and the 70 grand. So let's say you had 50,000 expenses, so you had 30,000 you put in profits, then you had another 20,000 left over there, and then you had your 50,000 in expenses. Well, they only put enough money to account for the taxes on the 20,000 instead of the 50 that you had total in net profits, okay? Because I need to make sure I'm putting away taxes for the full net profits, but I just want to make sure that I take my profits first, okay? So I'm gonna take my 30 grand, put it in my profits account. I'm gonna see that I have $20,000 left over. I'm gonna say, okay, cool, that $20,000, I'm gonna multiply that by whatever I need to put in my tax account, plus the 30,000 I took out, which equals 15,000. So out of that 20,000, I'm gonna take 15, I'm gonna put it in my tax account, and then I have $5,000 left over. I've already taken my profits, I've already taken my tax money out, and now I have the $5,000 left over, and then obviously I have my expenses, but I'm good there because I only have 50,000 expenses. So I take that $5,000 and I put that $5,000 into my reserves account. This reserves account is an account that you're using to save up, just like our stress-free account. Our reserves account should have anywhere between 3 and 6 months of business expenses in it. In fact, what a lot of companies do is they have 3 to 6 months of expenses in liquid cash that's really accessible, and they have an additional 3 months at minimum inside of like a money market account, which is a little bit harder to reach, but it's growing interest really well, okay? Again, let's summarize this because, I might have lost some of you guys. Make sure you're writing on a piece of paper or doing something to keep track here, because this is, it's really simple, but it can be really complicated, okay? Because most of us, we didn't grow up being taught financial management, all right? So for our personal bank accounts, we have our expenses, our stress-free account, our live-free account, our wealth capture account, and then potentially a tax account. We also want the home safe, right? We want to get at least 2 months of cash inside of that. If you can't get this done, then you should not be focusing on trying to spend money or buy vehicles or do anything else until you get the household taken care of. Play the long game, make sure your house is taken care of, and then we can start, putting money into rentals and doing all this other stuff, okay? If this isn't done, your rental don't matter, because if something happens and you can't have the reserves to pay for your family, that rental is not gonna do too much for you, okay? Sell the property, sell the money, get your family taken care of, get the household taken care of, and now we can start focusing on the rest of the stuff, okay? So for our business bank accounts, we have our expenses, our profits, our taxes, and our reserves. We're gonna take all of our expenses and put it into that expense account. All of our active income goes in that expense account. And then we take 30% of that active income right away. We put it into our profits account. Depending on what your profits percentage is, adjust accordingly. We're gonna take 20 to 30% of our total net profits and put it into our tax account. Anything left over between our expenses and our what's left over after we pay our taxes and our net profits to ourselves is gonna go into our reserves account. And we wanna get that to at least 3 to 6 months. Now, what I will say is that if you have decent income coming in, you're paying yourself a salary, which is part of your expenses category, by the way, that's business expenses plus salary. Net profits are a distribution to yourself, monthly or quarterly. And so if you pay yourself through your expenses and you're doing okay on your personal family side, you got all that stuff in order, maybe you take your net profits and you overfund that reserves account to get it caught up right away, so you don't have to worry about putting money into it no more, just like we did with our stress-free account, right? Like I always have, I never go below our reserve account, and I always have that money in there. And when I first started, I made sure that was funded first before I funded myself, so that I could, start just giving me everything, So it makes it easier than having to have to transfer to that account when you already, when you can just have it already done, okay? And as your company scales, obviously, if you're gonna hire an employee, for example, well, you're gonna have to have an extra reserve. For every employee you hire, whatever their salary is, you gotta multiply it by 3 to 6 months, and then you gotta start taking from your net profits in order to fund that reserve account to make sure that their position is funded for the next 3 to 6 months. In fact, you should really realistically preemptively plan the quarter ahead to have that money in that reserve account so that you can go ahead and hire them. It includes like their tech policy, if you buy people laptops and those types of things, you gotta have that money available, and anything else that's there, okay? So that's financial management, okay? The priority of this for our personal bank account is to make sure that we're paying ourselves first from our business account into our personal account, and then distributing that out, getting that stress-free account set up, getting that wealth capture account set up, maybe even keep that in a different bank account so you don't touch it, and getting that 2 months of cash, okay? Hopefully, this was valuable to you. Hopefully, I didn't lose you. I think as long as you go back through and you kind of write down some notes, it'll be a little bit easier here. If you guys have any questions, comment below on what it is that you're having trouble with, and I'll help out the best that I can. Just remember, I'm not a financial advisor, and I do think you need to have a CPA and a bookkeeper in your corner to make sure that you do this efficiently. So if you guys are an entrepreneur and you're really looking to maybe get to the next level, definitely in the link below is the application for the Allies War Room. It's for higher level people that are looking to really kind of meet with other higher level people, but we do cover these more nitty gritty kind of topics inside the War Room. And hopefully I'll either see you guys there or see you guys in the next video. Thank you guys so much.